What is Interledger's total addressable market size? All the money.
When XRP was created, this actually was created before Ripple existed. The creators of XRP decided there'd be 100 billion units because they saw it as a, rather than having a smaller number with a very high price, they saw it as something they wanted to be effectively a global reserve currency. We will continue to work with central banks, we'll continue to work with regulators in educating them about how we can accelerate the financial ecosystem, which is good on many, many, many levels, and not in some way circumvent and enable anonymous transactions that obviously the government has concerns about.
But can you reach a point with fiat currency where you're in a stable relationship and not actually eroding and undermining it?
Well, I don't think XRP is eroding and undermining.
I mean, how is it complementary in a sort of in a stable way?
And not a threat, right?
Well, I mean, the solution I described earlier with XRP, US dollar domestically is a great solution.
Yeah.
You're selling that US dollar, you're buying XRP, you're moving your XRP over to another digital asset exchange, you're selling the XRP, you're buying an Argentinian peso, just to use that example. I mean, I'm even careful, and I would even encourage journalists of the world to be careful, that I don't call this cryptocurrency. It's not currency. I can't go to Starbucks or Amazon and use, and then somebody inevitably well, I have one example where I bought something with a Bitcoin, and then I usually say, well, did you do a second transaction? It's not actually a currency. These are digital assets. If the asset solves a real problem for a real customer, then there will be value in the asset. If the asset is, and frankly, I think many of the explosion of tokens don't have a real purpose. I was early last summer, I was very active in saying, look, I think these ICOs are a very bad thing for the industry. There are exceptions that I would say, okay, that ICO, there's a real utility to that token, there's a real purpose. But look, a lot of these things I look at and I'm like, this is not going to end well. And then I think the comparisons people make to the dot-com bubble, I moved to Silicon Valley in 1997, I lived through that. There are some fair comparisons. But you also have to remember that Amazon was born in that era. You also have to remember that Google was born in that era. There are companies that are going to grow out of this crazy evolution, this crazy revolution, that are going to be very valuable. But there's also going to be some carnage along the way.
Right, absolutely.
How do we keep up? And, till now, frankly, U.S. regulators have actually helped China by officially giving clarity to the two protocols effectively controlled by Chinese miners, Bitcoin and Ethereum. That's a mistake. We've got to also give clarity at least, and maybe even support, if this really becomes a tech cold war like it's looking like it will be, to technologies that are more favorable to U.S. and its allies' stewardship of the next-gen global financial system. Otherwise, we face a potential catastrophe. I don't know what the odds are, but there's some meaningful, probability if China was to get control over the next-gen financial system. I mean, that could really be devastating to American power and its allies' ability to make payments to defense payments to an ally. American banks that might be blocked or throttled back on how fast their payments go. You could even see some terrible situation where a U.S. company that has a low Chinese social credit score could be blocked from that new infrastructure. Those are bad outcomes. Even if there's a small percentage chance that happens, we've got to check that to make sure that we're involved and we're competitive as a country.
People already have usually seen some kind of blockchain presentation. It already looks a lot like this, but is a little bit more superficial in terms of the similarities. And so if I want to send a packet into this network, I just send it to whichever connector I'm connected to, and it should find its way to whatever receiver I've put on it. So in that way, it's a lot like TCP/IP. Now you might say, okay, so you're routing these packets, but how does actual money really move? So the way that works is that once you have sort of a path and you're sending these packets, each link is responsible for its own settlement. So what we tend to do is if you have two connectors that have a peering relationship with each other, they're going to have this like packet traffic going back and forth. And so they're going to look at those packets and then they're going to eventually settle. And for the core of the network, it makes the most sense to settle through a digital asset. And the reason for that is that they are very easy to move internationally across borders. You have very low costs in terms of when you move them. And since you're going to have a lot of inbound and outbound traffic, it makes sense to just stay in that digital asset to do all of your settlements. But of course, the majority of people, users out there, don't actually have easy access to digital assets yet. And so you do need some kind of some form of support for traditional payment systems. And the interesting thing is that all these settlement networks really do is, move payments across, or like move money. And so that's something that is supported by all the legacy payment networks. So what we can actually do is we can just aggregate to a greater degree. So we wait a little bit longer before we settle. And then we send one big payment across. So you see that kind of at the beginning here with the sender down there and the receiver in the upper right. Where those settlements are happening a little less frequently, and they're a little bit bigger, and they're probably a little bit more expensive, but they can settle lots and lots of these individual packets. And so with this architecture, what that means is that from an end-to-end perspective, we can send a packet at incredibly low latency. We can send it at an incredibly low incremental cost. And so that's really what makes it feel a lot like the internet.
So 3 to 5 years is tricky. If you'd said 30 years, I think I'd give you a more accurate vision. I think 3 to 5 years has a lot of dependencies on, does our economy reopen in the next 6 months? What happens with the presidential election? What happens with China on various immediate issues of national security? So, but what I would say is if you kind of assume a steady state on all of those things, what I think will happen is 3 to 5 years from now, I think banks will be connecting to blockchains the same way that they connect to SWIFT and ACH and other networks.
Right.
Once they do that, the nature of banking will begin to change, because while banking will always, I believe, be the key on-ramp and the key value-add service provider to people's financial services lives, they will not be the bottleneck of the transaction of financial services. Instead, they will be nodes on a network along with a lot of other nodes, many of which won't be banks. And that will really change, I think, and allow banks to focus on what they're best at and what we really need them to do. So I think that will happen for sure. I do think that in a world of geopolitical instability, crypto assets in general will grow and become a more significant part of people's lives. That's one of the reasons why, I believe Bitcoin prices are going up in an environment of perceived instability, is people start to believe that the sovereigns are, maybe not as trustworthy as they once were. Bitcoin is not generated by any sovereign. Maybe that's a thing to hang on to. So I think you'll see more of that. But over time, the world tends toward more stability, right? Things reach equilibriums. And so since decentralized things are more stable than centralized things, I would predict that the movement that started 200 years ago with the first Bank of the United States, a movement toward more decentralization, will continue. Banks will adapt to that. They will add value to that, and the world will go on. But it'll go on in a cheaper, faster, more accessible way than it has before. And that'll be through the good work of people like you. So that would be my view.
It's awesome. The money movement continues.
That are involved. Is there a long list or a short list of countries that you can send money to through XRP?
Well, for us here in Australia right now, it's just Australia to the Philippines. But I know that there are other kind of routes that are up and running. For example, the US-Mexico line, I think, is one of the better developed. The exchange partner there is called Bitso. And they were looking to get, I think, about 20% of the business between the Mexican-US transactions. And they currently have about 5% of those transactions. And they're seeing XRP and Ripple more generally are seeing quarter by quarter just ramping up on growth across all of those lines. So there's Mexico, the Philippines. I know you're looking at Europe. You're looking at the US dollar into Europe. You're looking to exchanges out of the Euro. They've got Euro partners there. So it's growing, but it's growing kind of incrementally. And I know that they're kind of going country by country, knocking them off as they go through and building in the plumbing. Because all of this, while the raw technology is there, I would imagine the whole process of getting your partnerships lined up, et cetera, is rather the human element, the timely consuming part comes in.
Like it's already merged with Wall Street. That's what I've been talking about with XRP too. XRP provides an on-ramp for institutional money. That's why I'm super bullish on it. because it's an on-ramp for institutional payments, cross-border remittance worldwide that big banks use, like JP Morgan Chase, Goldman Sachs, Bank of America, Wells Fargo. And just like Amazon started with books, XRP is starting with the on-ramp of institutional money transfer. And guess what that leads to? Monopolies, right? Amazon started with books, now they sell everything. Google started with search engine technology, now they own everything. Facebook started with a college campus message board, now they own everything. So many of these tokens, but this stuff is not.
Because if you've seen the Twitter feeds out there, you'll see some
What? I've never
colorful
noticed.
stuff. Yeah,
What are you talking about?
No idea. No, but honestly, I was actually asking someone else about this, and they posited that it's because you guys are kind of a hybrid. You're sort of a corporate blockchain thing, but you're also a currency, so you don't have your own tribe, you know, and so that kind of puts you in the crosshairs of everyone. What's your theory? What's up with the hate?
Well, look, I think the crypto markets and the origins of this industry are born of a group of people who, frankly, were very much on the far edges of libertarianism of we don't trust the government and we want to avoid the government, we want to circumvent the government, and even some would say let's take down the government. You know, one step closer, they would say the banks are the man, we hate the man, let's bring down the man. You know, Ripple took at the time, and maybe even today still, a contrarian view. The revolution of blockchain is not happening from outside the system. The government is not going away. And if governments don't go away, all of the regulatory frameworks that apply to financial institutions are not going away. And that means banks are not going away. And so our attitude is, look, if you want to enable an internet of value, you have to connect the repositories of value. The Bitcoin blockchain is a repository of value order of magnitude $120 billion. The repository of value of the banks is many, 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 many trillions. So if you really want to impact society, if you really want to change the nature of how our global economic infrastructure works, of course you want to partner with the banks. Of course you want to partner with financial institutions. But to your earlier point, I think that has made us unpopular with some that, you know, they pray at the altar of certain cryptos and they have an ideology and religion about it. I do think, I use holy wars. It's a crusade for some.
Yeah, so you don't think Bitcoin's going to get rid of the Fed anytime soon?
I don't think Bitcoin's going to get rid of the Fed anytime soon. But although, can I interject also, because I do pay attention sometimes to what the community says. You know, last week I was quoted as saying, Brad Garland is out bashing Bitcoin. Let me be very clear. I own Bitcoin.
Hang on. The quote was about China. You said there's kind of...
I was going to get there.
Did you, I'm assuming you know Miguel Valles, who's the ex-head of XRP Markets. My understanding is that he recently left Ripple.
Yep.
Now, the most interesting thing that he has ever said, and I love some of the words that come out of the people at Ripple, because that is what has kept me so fascinated by this company for so long. He said that Ripple had a simple goal of making XRP the world's reserve digital currency. So the question I have is, do you think that Ripple will achieve this goal?
Well, I see, my hopes are tied up with his vision, but that's why I joined Ripple. I mean, when I joined Ripple, it looked like Bitcoin with two extra columns, currency and who issued that currency. And so I want to live in the Star Trek world. And in the Star Trek world, it doesn't matter whether you're a Klingon, a Romulan, Federation, they could all buy dilithium crystals. But you can't do that if your form of value is all in a silo. And so Ripple was the first that basically had if you will, an intergalactic currency, something that could go everywhere. The great thing, though, I mean, Bitcoin had that as well, but in Bitcoin, you could only have Bitcoin. On Ripple, you could have both the XRP, but you could also have a representation of all the other fiat currencies. So there was a way in and a way out. So
it's a time not only to fight severe virus, but to shape the system. We have a unique but rapidly shrinking window of opportunity to learn lessons and reset ourselves on a more sustainable path. It is an opportunity we have never had before and may never have again. So we must use all the levers we have at our disposal, knowing that each and every one of us has a vital role to play.
Now is the time to think what history would say about this crisis. And now is the time for all of us to define our own role. What is it that would make it so that history would look at this crisis as the great opportunity for reset.
The Great Reset is a welcome recognition that this human tragedy must be a wake-up call. It is imperative that we reimagine, rebuild, redesign, reinvigorate, and rebalance our world. Rebalancing investment, harnessing science and technology, and advancing the transition to net zero emissions, all elements of the Great Reset, are fundamental to building the future we need.
The world's problems fit on three sides of a triangle. It's one versus many, man versus nature, and the unfortunate foundation is long-term versus short-term.
We had already income inequality that was fueling income, race, gender inequality. We have a climate emergency, which we can't walk away from. There's no doubt that the very survival of the human race requires us to act.
Any recovery stimulus should have green conditions attached to it. Energy prices should reflect real costs.
You need private sector capital, private sector ingenuity, private sector technology, and private sector capabilities to come to the party. You need enormous trust between the private sector and the public sector for this to actually work.
We have to change our economy dramatically in the next 20 or 30 years, and the next 10 years is absolutely decisive.
The recovery has to be greener than any of the previous recoveries. And in order to do that, we need to...
What crypto tokens are fundamentally about is they're supposed to be the assets that are powering networks. They're the things that are incentivizing people to connect to the networks such that the functionality of the network, networks don't behave that way. And what crypto tokens are fundamentally about is they're supposed to be the assets that are powering networks. They're the things that are incentivizing people to connect to the networks such that the functionality of the network, like the internet, becomes very stable and resilient over time. So we see this as more of an infrastructure issue than an investment asset issue in its maturity. And the reason I think that people have seen what they've seen from the regulatory agencies is that we haven't achieved maturity yet. And so in the early days, you have speculators, right? And you have people trying to take advantage of speculators. But in the mature phase, what you have is a radical new payment system that may be better than existing payment systems, which are built on antiquated technologies. And since the OCC is in part the administrator of the banks that operate on payment systems, we have a strong interest in trying to envision a medium-term future, not a tomorrow future where people are speculating on Bitcoin price movements, but a medium-term future where these blockchain networks that have been built are basically the internet of finance. That's where I think this goes. And that's kind of a mind-blowing challenge to the banking model. And so I think our responsibility as regulators on the bank side is to get out front of that and help chart a course that shows that there is a future for banks in this world, that banks play a critical role in this world, and we need to establish a framework around it so the ways they connect are safe and sound.
It's the idea that we can design financial systems that operate in a decentralized way. So when we look at the financial system at large today, it is run in a balkanized methodology. There are different systems running by different operators in different countries, and there is no coherent standard to unify all of the payment systems for settlement. Now, certainly there are standards for messaging and rules and compliance, but there is no global ledger on top of which we can build an entirely new infrastructure. I think the idea of what we mean by the Internet of Money is that anything of value can be made liquid to any other thing of value in real time, cross payment systems on anywhere in the planet. So ultimately, in our vision, we would like to be able to see anybody in one network transmit value to any other network, cross asset in real time as easily as sending an email.
Wow. So you see this as a positive development for?
We see this as tremendously positive, and not just positive certainly for us as the creators of the system, but I mean for the incumbent infrastructure as well, the incumbent players, the asset custodians that are running the system today, the clearinghouses and governments and central banks that rely on these systems. We think that this is a capability that can further their mandates and enhance their capabilities.
Do they think that too?
By and large, yes. We have typically, I mean, this is a big challenge in what we're doing, and I think that what they think when they look at this technology, their first reaction is to assess it against the blockchain. It's a little bit of a different technology. So once you understand that it's simply an accounting system that has these added features of market making and liquidity provisioning, that in turn, I think, opens up a whole new world of possibilities that are frankly very exciting for everybody, including regulators and enforcement who see a lot of potential in transactions moving across a coherent unified ledger. as opposed to trying to track down payments that are moving across multiple ledgers, which becomes very opaque.
Talk a little bit about what XRP is. Not all digital assets are the same. Digital assets have differences in technology, differences in use case, and so on. And I think the focus should be on the use case. The crypto markets tend to show tokens rising or falling as a unit. There doesn't seem to be that much distinguishing in the price. But I think in terms of the long-term success of these projects, they have to have some sort of a real use case. And it's not enough to say smart contracts, like smart contracts for what? It's not enough to say Internet of Things, like what specific Internet of Things are you doing? Cloud storage, anonymous transactions, all these different use cases. And again, we think they all come back to payments. So fiat currencies are backed by governments. Governments ensure their scarcity and value. Digital assets, of course, are not backed by governments. They're backed by cryptographic algorithms. And what I mean by that is that their scarcity and value is ensured by cryptographic algorithms. Bitcoin uses proof of work. Ethereum, as you know, proof of work. Although Ethereum is now switching to proof of stake, they encountered some of the obstacles with proof of work. XRP uses a different algorithm that we call consensus. And I have to back up 1 second here and just point out what this algorithm is doing is solving exactly one problem, and that's it. Every other problem we can solve just by having all the data open, so you don't have to worry about trusting someone else to know whether or not someone has the funds for a transaction. Everybody knows the transaction validity rules. They know the digital signature algorithms. You don't have to trust someone else to tell you if a transaction is valid. The only issue that you can't solve by everybody enforcing every rule is ordering transactions. You can have conflicting transactions where someone tries to send the same asset to two different people, and you need some rule to order two valid but conflicting transactions received at about the same time. That's all consensus does. So that is something that nobody should particularly care about anyway. It's deep in the plumbing. It just has to work. Just like if you want to spend Bitcoin, you don't care about mining. It just has to work. It's the same thing. It's just that way of resolving the double spend problem. And because we resolve the double spend problem in a more efficient way that's more cooperative than competitive, we have significantly better performance metrics than many other digital assets. I would look at the much faster settlement. Bitcoin fees are not around $20 per transaction as they were when this slide was made, but I think it's important to point out that you're kind of at the mercy of the block size controversy. Miners want large.
I'm long Bitcoin, and Bitcoin I think has real utility around being a store of value. It's digital gold. But if a Bitcoin transaction takes on average 12 minutes to confirm and the transaction cost is over $1 per transaction, that's not going to be great for a payments solution. So around payments, we think XRP is uniquely and extremely well positioned to solve that payments problem. It's extremely fast, at about 3 seconds per transaction, and it costs about 1/1000th of a penny to actually enable that transaction. So we often make the point that, well, where Bitcoin is very profound in solving that store of value, an XRP transaction's about 1,000 times faster and it's about 1,000 times cheaper per transaction. With MoneyGram, we know out of the gates we can actually make their system much more efficient. And the key reason is today, both Western Union and MoneyGram, they pre-fund accounts around the world so they can make payments. So MoneyGram and Western Union have negative working capital. What our products allow those companies to do is to not pre-fund and to shoot payments in real time. And that's a massive savings in terms of the efficiency, not just in terms of what is the cost in FX, but the capital cost, the outlays. That it's really a dormant asset when you pre-fund those is sitting there waiting for people to make payments. And that's really the transformational thing that XRP as an extremely efficient digital asset allows for the industry.
XRP, next leg up. Once again from Peter Pumpkin.
Right now, only 2% of internet users have even been exposed to crypto. We are a niche, small piece of shit in the universe of business, all right? But this is going to change. A lot of new people are going to come into the space. We talked about the growth numbers that you are expecting each year. You think that 16% of the internet population are going to use crypto in the next 5 years, right?
Easily. Yeah.
Easily. So where are all these people going? They don't know anything about the current wars that are taking place, the current toxicity within the crypto community. They are going to go with the currency that gives them the cheapest fees, the fastest transactions, the most reliability. And currently, unfortunately, that is not Bitcoin. Right now,
not really my area of expertise, but I think it depends which currency you talk about. So like anything, I think the price of some things are hyped up and the price of some is probably lower than it should be. So if you look at the fundamentals of what is behind the price of a lot of cryptocurrencies, a lot of them probably are hugely overpriced. If you look at the real utility of them and the businesses or the ideas behind why they exist, and you can try to get an idea of their utility in the future, I think there's some that still have a lot of growth potential.
So what do you think,
CEO Brett Garlinghouse, he joins us right now. And you know, David, some say Ripple could be the next Bitcoin. What do you think, Brett? Is that a compliment that Ripple could be the next Bitcoin?
Well, I think if we're solving a real problem and it's at scale, then I think it's a compliment. I think the most important thing that is going on in crypto is understanding what is real and what is just hype. Some, I think, may look back on Bitcoin and find that it was the Napster of digital assets. What I mean by that is Napster was the first to digitize music and demonstrate, hey, if you digitize music, you can do a lot of cool things with that. But ultimately, they were circumventing trademark laws, they were circumventing royalty payments, and government stepped in, and Napster was not successful.
The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I don't want to go into great details about
Maybe I should take what the IMF is going to do.
And up swap lines with a large number of countries where we had already established swap relationships. We made sure that those had much greater flexibility, better pricing, and then we went further and established repo facilities for some foreign central banks to help support the U.S. Treasury market, because we understand just how important the liquidity and depth of the U.S. Treasury market is globally. And, those interventions, I think, were welcomed internationally. They made a big difference here at home. We saw those measures of dysfunction in those markets quickly coming back down, and the usage of those facilities commensurately will start to come back down as well. So I think the biggest, lesson is just how important it is for us to be aware of our role in the global economy and how big a effect the global economy can have on us.
Really important is that any digital asset to be valuable has to be serving an actual use case. It can't just be speculation. Obviously, a lot of the market today is really speculative, but we think over the long run, it's going to be that combination of deep liquidity, market makers, institutional bets being made, but very importantly, it has to have a use case. We think the use case for the XRP Ledger and XRP the digital asset is really around initially reducing the cost of liquidity for cross-border payments. Long term, though, we think it's a key winner in this race to be another digital asset for the world for all kinds of use cases. So that's the way we see it. It's a long-term play, has to have value, can't just be a store of value for store of value's sake, has to actually have a use case, and that's how we see this evolving.
Okay, final thing. There are a lot of concerns over the centralization of XRP and the amount of pre-mined XRP there are. Can you address that for us quickly?
Well, I think this comes from the Bitcoin community, the Ethereum community. There's a religious war going on between platforms, and that whole idea around centralization is bogus. That's just not the way it works. Please look at it. It's an open source system. It's permissionless. You've got 140 public validators. Ripple has like 7%, the company of those. So look, if Ripple went away tomorrow, XRP continues as an open source, permissionless ledger. We would say it's easily as decentralized as Bitcoin or Ethereum. So in some ways you'd argue even more so, given that proof of work leads to more centralization, as you're seeing with Bitmain in China. And whereas consensus systems become more and more decentralized. So, yeah, but important to remember, this is a religious war between these platforms, and you see a lot of nonsense and FUD out there. Look at the facts, and I think it's pretty clear.
different ways of doing it. The main thing here is that cryptocurrency trading and cryptocurrency exchanges are largely unregulated today. So the market manipulation practices that happen in today's stock markets are happening maybe times 10 in cryptocurrency markets. Everybody's taking full advantage of it until we have regulation surrounding it.
How do you think, what is the next move, on Ripple's roadmap, in your opinion? To put you on the spot here.
No, it's very simple. So I think one thing, if there is one message that you can get in this room is Ripple is not an ordinary company. We are not here to have a small market share or do X, do Y, and make small amount of money or something to happen. We are here to make a dent in the universe. Either we will change the remittance universe, the way you understand, the way value gets transferred across the world, between people, between institutions, or we will just fade away. So it's almost 0 or 1, and some of it comes from our Silicon Valley arrogance. Some of it comes from, that's the reason 6 years ago we were born with the mission of moving money like information moves today, right? And we are making it possible working with the existing ecosystem. So I think this is a key differentiator about Ripple, and that's the reason we are a monoline company. Every day we get tens of ideas to say, why don't you do security settlement? Why don't you work in trade finance? Why don't you do X, Y, Z? And what we tell them is, just cross-border remittances is $155 trillion problem. We'll solve this first. We'll make a difference to everybody who's present in this room. And once we have made the difference, then only we will look at something else. So we are like Google is for search, Ripple is for remittances. And that's what we're going to do. We're going to do it right, and we will not rest till we earn your respect and your business.
There are tokens being used in regulated sections. I mean, I'm thinking of XRP in this case, but where I think I'm going to take the long view. I think there's going to be a lot of volatility. I think what we're building has, it's solving a real problem. And I think all of the tokens, my advice to anybody would be, understand the utility. If there's real utility and there's real value being delivered to a real customer, there will be value in the token. Otherwise, I think, be careful.
When we talk about the market,
Originally, people would come to us with very specific problems, like Santander had specific payment issues within their own business units that they said, hey, can your software solve that? And we said, yes, it can. And it's evolved to sort of a network proposition where the idea is just like the internet. When I sell you the internet, I don't necessarily tell you specific problems you have that it can solve. The idea is that everything is there. It's like it's your sort of one-stop shop for something. And our network now with 300 partners or so, it's now at the point where it's almost a marketing tool for our customers. So if let's say you're a payment company and you can clear shekels into Israel, we'll go and look for banks or payment companies that need to do that. So we kind of become a marketing arm for the customer to sell the services that they need and find them new customers and peers. So it's that sort of pivot from a series of point connections to a network solution. That's that very interesting inflection point. And I think that applies to a lot of blockchain businesses where you're trying to pull people onto a platform. And once there's enough on that platform, it completely changes the value of that platform and the way people think about it.
So what role will remain for cash in this digital world? There are already signs in some shop windows. Cash not accepted. And it's not just in Scandinavia, the poster child of a cashless world. In various other countries too, demand for cash is decreasing, as is shown in our IMF work. And in 10, 20, 30 years' time, who will still be exchanging those pieces of paper called checks? Bank deposit, too, is feeling the pressure from new forms of money. Think of the new specialized payment providers that offer e-money. From Alipay to WeChat in China, to Paytm in India, to M-Pesa in Kenya. These forms of money are designed with the digital economy in mind. They respond to what people demand and what the economy requires. Even cryptocurrencies such as Bitcoin, Ethereum, and Ripple are vying for a spot in the cashless world, constantly reinventing themselves in the hope of offering more stable value and quicker and cheaper settlement.
Including faster payments, inexpensive payments, and micropayments, all hugely helpful. What risks do you see for consumers?
Well, there's a lot of risk, obviously in any new industry, which is going to bring in new markets that may not even be categorized to be regulated yet. So again, the whole digital asset space generally has been, it's been a little bit orphaned, if you will, or not quite figured out where it fits in, and that depends on the country, of course. So yeah, that opens up to abuses, possible abuses. It's still a small industry, so probably systemic risk isn't such a concern. But on the consumer side, I think that's why it's important for a consumer, because the consumer really shouldn't even have to think about any of this. This should be pretty invisible.
Yeah.
So again, that's why we're not really big believers in kind of a consumer direct approach. They should just use their banks. And then all they know is that one day, hey, I just sent $5 to my family in India and it got there in 5 seconds and it was practically free. And wow, that was
I take with cryptocurrencies is the term currencies. And I think they are not currencies. They are not a good store of value. They are not a good medium of exchange. They are not a good unit of account. I think the attempt to have them to come into life as a way to substitute legal tender and fiat currency is a failed attempt. And I think it's a misplaced attempt. There has been a long history in the last 2 centuries at least of private, to substitute with private money fiat currency, and it doesn't work that easily. Now, they have a role as a crypto asset. If you have an asset that is out there and some people might want to intervene there, well, there might be some room for that. What I would want to see is to have more clarity in terms of what the assets are. It's something of giving some guidance to potential investors to have clear rules and so on. So there might have a room as part of a financial assets in general, but not as cash or cash substitute. And then the issue of blockchain. Blockchain is a technology. It's a very powerful technology. Now, technology by itself doesn't necessarily make a financial asset or a cash substitute. Blockchain can be very powerful for many alternative applications, like, for example, in settlement systems, in keeping settlements of financial transactions, so some back office applications. So I think the technology by itself should be embraced, and we should see what the uses of that technology should be. But blockchain by itself is not sufficient to think of a different monetary arrangement in a country.
What's the real benefit of crypto? What's the real use case? Sure. And if you look at Bitcoin or Ethereum, Bitcoin Cash, whatnot, I would love to say, man, hey, in Japan, everybody uses it at Starbucks, right, to buy their coffee. Not true. Okay. Now, truth, Tony, is people do use it more in Japan to buy stuff than anywhere else. Maybe, right? However, come on, if you look at the global zoom out, right, speculative value.
Yeah.
It's an investment. It's like buying gold, okay? That's just the reality of the situation. But for XRP and for Ripple technology, I would say, maybe it's because of my role as the CEO of SPI Ripple Asia, but the actual use cases, like for remittance, I get daily reports at 9 a.m. JST every morning on all of the transfers that are being sent using Ripple Tech, okay, from Japan, South Korea, and other places, overseas. There's a lot going on, man. That's a real use case that is way beyond just speculation. And that makes me happy. It makes me excited, because that's a real thing where the technology is being used for something other than, the equivalent of buying gold or silver or stocks or equities and gambling, sort of like on investment, right? And I think for a technology to really become successful, it's going to have a use case beyond just pure speculation. By the way, gold has a use case beyond pure speculation. It's called a ring. right? It actually has that, right? Most people don't realize, but Bitcoin doesn't have that yet. We worked so hard to make it, something where you could use as a payment method, but for a variety of reasons, people love their credit cards, even me. to get miles and points and stuff like that. But with Ripple Tech, you're seeing real use cases beyond just speculation.
I want to follow up with a couple comments on particularly the conversation about what we'll see going forward and the ecosystem we see developing. So right now, I think blockchain and Bitcoin has been described as a panacea for everything in financial services. We spent 2 years working with banks for proof of concepts, pilots, and live products that they're working over our network now to learn that that is not the case, that Bitcoin or blockchain is not needed to solve all of our issues. As was said earlier, DTCC can go real time today with the technology they have today. It's not a technology problem. What we're focused on and where blockchain comes in is on use case specific issues. So in finding a use case where there's friction that could benefit from blockchain. So in our vision of the future is that you have some blockchain or Bitcoin networks developed, both private and public, and you also have centralized systems like DTCC running today. And the value we see going forward is not in building a network that everyone uses, but in connecting these different networks. So we see a varied ecosystem of both distributed companies and distributed networks, along with centralized networks. And the value here is going to be connecting those. There was a comment earlier about, do you need blockchain to connect those? And we wholeheartedly think no. That is not necessary, and nor do we think we'll likely see that. Likely because of the permissions, the operational resiliency concerns that come up when outsourcing the operations of a network to unknown parties. That's far outside of what we see in the regulatory construct. So we likely see an interoperability protocol that gets developed that is not blockchain-based.
You mean the individual networks may be blockchain-based, but the network-to-network thing is not?
Correct. And I would point folks to the W3C, the Web Standards Group for the Internet. They have such protocol that they're working on now called Interledger. And it's a non-blockchain protocol that connects centralized systems and distributed, along with distributed to distributed. It creates an internet of value, as we see it, where there's connectivity between all different types of systems and systems that are designed for use case specific problems.
We are the custodian of the euro, which is your currency. Your currency for your future. I would like to join the call for action of the United Nations to engage you in participating in the policy debate that we have. What will the future hold when it comes to monetary policy, when it comes to the price stability which defines and is the mandate of the European Central Bank? Well, what matters is the euro, banknotes, or digital currency. What matters is fiscal policy, working hand in hand with monetary policy. Yes, but how will that be managed in the future? That's your future. What about climate change, and does it impact on price stability? And does it matter for your future? All those questions are relevant and important and actually touch on or sometimes determine what we at the European Central Bank have to do to be good custodian of our common good, the euro. So please engage and participate with us.
We were a small company, it was about 4.5 years ago, and there were 3 use cases the company was focused on. One was a smart contracts platform called Codius, using the XRP Ledger. The second was a company, kind of a project called Global Identity, and the third was the payments thing. My view was we had to focus, and choose one, and if we were lucky with that one over a period of years, maybe we'd get the opportunity to do number 2 or number 3 or number 4. I don't look back. I mean, given what has transpired, one could argue that we should have focused more on smart contracts and what happened with the Ethereum network. I don't regret that. I think the payments, like, you have north of $20 trillion going cross-border each year. It is fraught with error rates, and it's slow, it's expensive. For me, it's a classic like Silicon Valley going up against the big behemoth Goliath. But it's so broken. I mean, when I go talk to banks, it's a beautiful thing for me because banks don't like SWIFT. They're frustrated with SWIFT. Their customers don't like SWIFT. And that's a great place to be when you're selling into that. So do I think there's other vertical use cases? And maybe if I went back, could we do it differently? Yeah, sometimes I wonder that, but I also think we have been so fortunate through a little bit of luck and a little bit of skill that we find ourselves with a lot of momentum in, I think, really solving a problem using these technologies at scale.
I mean, it was innovative, hats off to the people for trying something, but I think it was a little bit too dependent on the ICO craze, which obviously kind of flamed out, right? It didn't seem like it was much more than that. Whereas I think web monetization, I think that is a long-term trend. So web monetization just simply means once you get this Internet of Value, so again, things like ILP are being used there, and that you then have this kind of a more open system where content creators can go online and they can, fund their models through web monetization. And we don't know how that's going to quite play out yet. Could be I still have hope for Google. Okay, I don't have any hope for Facebook, but I do have hope for Google because they do spawn a lot of weird stuff, and they've actually poked around with web monetization, even though it's an affront to their ad model. But I don't know, still the founders of that company, they show up at Burning Man, they do all kinds of cool stuff, so still have hope for those guys. But so that could spawn it. Apple could spawn it too with their movement into sort of privacy above all. They're not an ad model, they don't have a dog in the hunt there.
Indeed, lots to look forward to. Let's see what happens. Interesting times in human history in terms of technological innovation. This week in XRP next week, once again from Boy XRP.
Climate change, those are kind of unacceptable methods when you have to chew that kind of electricity up just to confirm a transaction, which you don't have to do. You could do it in other ways, like XRP Ledger does it in a consensus model. It just doesn't use meaningful amounts of electricity. So I think maybe people use that as store of value, I guess, but you just don't.
So I'm the co-inventor of Interledger. I've been working on it full-time for the past 3 years. So the problem that we want to solve is today, if you tried to go and actually use cryptocurrency for anything, you would have a situation like this. You walk into a grocery store, you say, hey, do you accept Ether? And they would say, what is that? No, sorry. And the fundamental problem is that all of these different payment networks are disconnected. You can't use any type of cryptocurrency today for payments because you need the other person to actually accept that cryptocurrency. Blockchains don't solve the interoperability problem by themselves. Blockchains are individual networks that have the same problems as traditional ones where they're all disconnected. What we need is a system for internetworking payment networks. And so this term internetworking comes from the internet. That's what it's named after. And at its core, the internet is all about routing little packets of data across independent networks. So what we need is a system for routing packets of money across independent payment networks. So what that would enable is me to pay you even if I have some kind of super obscure cryptocurrency and you just want dollars or whatever you want. So what Interledger does is it routes packets of money very similarly to how the internet routes packets of data. I won't get into too much of how that works, but I want to walk through some of the cool things that this lets you do. So when we're applying this analogy with the internet, one of the things we get to is this idea of streaming payments. So if you broke up payments into little tiny chunks and could route these packets super efficiently, what you could end up with is this idea of streaming payments. So one of the things that could look like is, oh, you need to send a bigger payment? Okay, it depends on your payment bandwidth, which is a weird concept that we work with a lot, where that would be measured in dollars per second that you can send, or whatever currency you have. Some of the cool use cases that come out of this, things like streaming media. So today payments are super inefficient and clunky, and so we prefer, things like monthly subscriptions. I pay my $10 a month because I don't want to be bothered by this.
So some people have heard me say this before, but I'll throw it out to the audience. What is Interledger's total addressable market size? All the money. Nobody wanted to feed it. Yeah, it's all the money, because what we're really talking about with this idea of the Internet of Value is creating a single global payment network that connects literally everyone and processes maybe not 100%, but 90+% of all the money. That's what we're talking about.
First and foremost, it's an amazing payments platform. That is what it was built for. That's what the original concept was for it, and that's what it does, and it does it really, really well. It's well supported by a company that has stewarded it for 5 years with no issues. Been running in production with real value on it for a very long time as the second biggest cryptocurrency in the world by market cap. A fair distance behind Bitcoin, admittedly, but pretty significant until Ether grew as it did. And personally, I think the only reason that Ripple isn't up there with Ether and Bitcoin is that Ripple as a company hasn't been able to put the focus into it that I think we would have liked to. And the community didn't take hold of it and do something with it as we kind of hoped they would. So if anyone is interested in doing projects on blockchain, wants to look at some really, really awesome blockchain technology, I would encourage you to look at this. Look at Ripple's distributed ledger. If your use case is payments, it is awesome. It is a seriously, seriously impressive piece of technology. Now, I think it's fairly obvious then why, as Ripple, we're so invested in Interledger protocol. It's an open protocol, right? Nobody gains anything by an open protocol itself or by open source software itself. You win in the industry, or you succeed by the fact that you give something to the industry or the community that's open and useful because you trust your ability to execute on top of it. And that's really what Ripple as a company is doing with its commercial solutions. But we genuinely believe that XRP and Ripple's distributed ledger technology will make it, will become more influential globally with interoperability. Because when everything is interoperable, you're no longer competing on reach, you're competing on how good is your network. And personally, I absolutely believe this. Ripple's is up there.
Gold standard would be very hard to do, but boy, would it be wonderful. We'd have a standard on which to base our money.
A solid country because it was based on a gold standard. We don't have that anymore. There is something very nice about the concept of that. It would be very, very hard to do at this point, and one of the problems is we don't have the gold. Other places have the gold.
It doesn't have to be gold. But since central banks in over 100 countries already hold gold as part of their international reserves, it seems a good, neutral reserve asset. I like the idea of a gold standard. I mean, it could be used in a very cryptocurrency way. The point is, do you have a unified money system so that when you talk about the international marketplace, everyone is playing on a level monetary playing field? Another Bretton Woods, or at least we need to be thinking in terms of a neutral reference point, a global unit of account. I mean, something like a gold standard even, updated to reflect a digital world and fast-moving financial flows. Important that we get ahead of the curve to ensure that the dollar continues to offer the best currency in the world, the most respected, the most utilized, and we need fintech innovation to keep us going in the right direction and to be a leader.
If the appeal of cryptocurrencies is their capacity to provide a common currency and to maintain a uniform value for every issued unit. We need only consult historical experience to ascertain that these same qualities were achieved through the classical international gold standard without sacrificing the sovereignty of individual nations. To the contrary, gold standard rules permit nations to participate voluntarily by operating in accordance with the discipline of gold convertibility of their own currencies. A modern version of this approach, one that permits the issuance of virtual currencies in tandem with government-issued currencies. Adapting legal tender laws to permit healthy currency competition should be put forward.
Invest in Bitcoin and other cryptocurrencies.
Well, one, I tell them to be careful, okay? They should be clear why they're investing in them. There's a lot of good things to invest in, obviously, we know about.
Think of banks as a set of heterogeneous databases with that are actually not very secure, and certainly the monetary system, the transfer system of checks is very insecure. Still is insecure. So are credit cards, and it's still mostly batch processing, and it was entirely batch processing that day. So it was not. So payments were, money was just like heterogeneous, high latency, low security, collection of databases. That's what banks are. And so just from an information theory standpoint, this should be something that can be much better if it can be real-time, secure, and just very fast. Essentially, it's just one real-time database.
System now is at its end, in my opinion. And that doesn't mean it's not going to go on for a little while, but I happen to believe with every fiber of my being that there is an entirely new system just getting ready to be rolled out. When this one here finally, however they're going to end it. See, that's what worries me more than anything else. Right now, we're in this period of, euphoria with regard to the stock market. The illusion of the market keep people distracted via any mechanism they possibly can. Our politicians, the mouthpieces for the central banks, all of them. Anyway, so what I worry about is when this thing actually is done, how are they going to implement it? In other words, we're going to need something catastrophic to happen, because what they're going to do is they're going to sell it. They're going to be like, okay, well, this system here, it's not working anymore. So what we're going to do here is we're going to implement this new system. Right? They already have it all planned out. And then they're going to introduce this to the people who are going to beg for a solution. They're going to create a monumental problem. Notice what I just said. They're going to create a monumental problem, something of probably nearly biblical proportions. And then they're going to say, we have a solution for you. Oh, yeah, and this is what it is. And people, no matter what it is, are going to beg for it. They're going to take whatever they can get, because why? They dictate the rules. We are nothing. We are a means to an end, period. That's what this whole thing is all about. It's about control. On a scale that I think people are just not going to believe moving forward.
Making an announcement yourself in terms of your backing of PayID. Can you explain what this is and why this sort of simplifies how crypto had transferred money in the past?
Absolutely. So at its core, Ripple has been all about enabling what we call an internet of value. Let's make all of these different networks that really don't talk to each other interoperable. We've all had the experience where, when you ask a friend, you say, hey, I need to pay you money. Are you on Venmo? Are you on PayPal? Or outside the United States, maybe Alipay or PayU. Isn't it funny? When I ask somebody for a phone number, I don't say, are you on AT&T? Are you on Verizon? I just get their phone number. The idea behind PayID is to simplify the ability to send someone money the same way, to make it easy as sending an email. I don't ask someone, are you on Google or Yahoo? I just send an email. And so PayID enables, whether you're a large bank, or I'll use a very successful regional bank in Chicago called Byline Bank. If you're an account holder there and I want to send you money, it should be as easy as typing Brad $ Garlinghouse. And whether it's resolving to a Byline Bank or to Bitcoin, all of this naming infrastructure can be much simplified and interoperable.
The core of the banks and governments are corrupt. And they're hopelessly broken, can't be reformed or fixed, and that this is going to sweep all of that away, and that in the hands of just people, everything will be fine because everybody's power will be equal, and then let meritocracy kind of take it from there. It's obviously too simplistic, right? Because at the end of the day, these are still humans. And that's kind of the fallacy here, I think, in general with Silicon Valley and also the tech people that led the cryptocurrency market. Too much belief in code over trust in humans.
Certainly cause people to take notice, because what had been discussed as theory, like what if Bitcoin will become so widely adopted that it could destroy the financial system, to, wow, this network is going to be built and it could be implemented on day one to how many hundreds of millions of people. That really got people to get away from theory and start thinking more practically about it, and caused literal nation states to start thinking about, okay, whoa, maybe we're behind the 8 ball on what we should be doing with our own sovereign currency.
From the same set of facts, if you will. The reason why I say I think China is ahead in some ways because, I think the US is behind. And I think the most tangible example of that is when the US government gave regulatory clarity to Bitcoin and Ether. And this was 2 years ago now, more than 2 years ago. The director of corporate finance, Bill Hinman, gave a speech that, providing clarity that the SEC did not view Bitcoin and Ether as securities. It made it accessible, and so that different platforms, different exchanges, even we just saw an ad before we started from ErisX, different players to say, oh, okay, now there's clarity around that, so we can invest in that. Well, I also think that follow the blockchain and crypto world are aware that today, because of the mining control of Bitcoin and Ether in China, these are technologies controlled by China. And, I think 25 years ago, the US was a leader in making the internet what it is today. But part of that came from regulatory clarity. Part of that came from the Telecom Deregulation Act in 1996. We have that opportunity in front of us now with blockchain, but I haven't seen the US kind of lean into that. And instead, in a world where we see all kinds of concerns about Huawei and 5G networks, we're 3 years from now, you can imagine the exact same headlines about these next generation of payment technologies.
Well, that regulatory clarity was.
This is the beginning of the greatest economic cycle this country has had since World War II. And I knew the things that Donald would do, and he hasn't even got started. But this is the eye of the motherfucking storm, the perfect storm. It ain't never going to get any better. Never. This is perfect for the QLA model. If I could have written a prescription or a formula, I couldn't have written it any better. Low interest rates, money's free, you stupid. Massive chaos. And Donald's going to rip the mother economy apart. And he's going to for practice in a good way. This is it. It ain't never going to get anything better. This is like a multiple orgasm the rest of your life, you fucking slags that are in the audience. This is it.
Sometimes I don't want to hear what Dan has to tell me. But as I wrote in one of my blogs, the old man, he's always right. Because he's telling you what you don't want to hear about yourself, but what you know is true. And that is, you're not stepping yourself up. You're not stepping your game up. And you get caught up in fear. As Dan says, false expectations appear in reality.